Hi, this is Matt with Gray Matter Trading, and today we're going to be looking at one of the most commonly used technical indicators, the VWAP. So the VWAP, which stands for Volume Weighted Average Price, is a lagging indicator, which means that the VWAP is a result of the price instead of the price being a result of the VWAP, and the VWAP is also a benchmark, which means that it's a standard used to measure performance, which we'll be talking about here in a second. The specific reason for the VWAP is to give the true average price that a security has been trading at during the day. Keep in mind that this is a single day indicator and really it's only applied to trading done intraday. Something else very important to keep in mind is to never rely completely on any one indicator. In any market, nothing is 100% guaranteed. But anyway, as far as applying the VWAP goes, the VWAP is applied differently by institutional traders than by retail traders. I know that I'm catering mainly to retail traders here, but the fact that institutional or professional traders use this is important because they're the ones that impact movement in the market most heavily. For an institutional trader, the VWAP is used to judge whether they bought or sold at a good price. When the price is below the VWAP, it would be considered a good buy, and when the price is above the VWAP, it would be considered a good sell. Institutional traders often move in and out of positions progressively by chunks, sometimes even over a few days. They obviously trade with a lot more money than you and I do, so if they were to sell, say, 100,000 shares of something all at once, he or she would have to sell in so many partial positions that it would just be chaos, which is obviously not good for any of us. As for retail traders, this is an indicator that's mainly used for day trading. Day traders may apply this during their trading in a couple different ways. First of all, to confirm a trend. If you believe a stock is trending upward, looking where the price is at in relation to the VWAP may be a confirmation of that trend. Another common application is to treat the VWAP as a support or resistance level. This is typically a pretty strong intraday level to pay attention to. In relation to support and resistance levels, playing off the price crossing the VWAP is also a great way to apply it. As far as trading strategies with the VWAP are concerned, and this will be kind of restating some of the previous information, there's the VWAP cross, which is pretty self-explanatory. Enter long when the price crosses above the VWAP, and enter short when the price crosses below the VWAP. Also, you can treat the VWAP as a level of support or resistance, something that happens oftentimes after mid-morning. Either the buyers or the sellers become dominant and spend the rest of the day trading either between the middle and top bands or between the middle and bottom bands. They kind of pick a side, and rarely does a stock flip from one side of the VWAP to the other more than maybe 2 or 3 times a day. Another thing that's pretty useful is to pair the VWAP with other technical indicators like the RSI, moving averages, MACD, whether to help predict movement in general or to help set profit targets and stop losses. Something to note is that some trading platforms don't show these upper and lower bands. If yours doesn't, it's not a big deal because the main one to really pay attention to is the middle one. I am using the TD Ameritrade platform, Thinkorswim, and personally do prefer to see these upper and lower bands. So anyway, this is a great example of a VWAP cross. The price crosses above the VWAP mid-morning and continues to climb until it hits that top band, bouncing right back down. Another thing to look at here is how after crossing back below the VWAP, the price really respected it for the rest of the day, moving clearly between the middle and bottom bands, then after crossing above the middle band later in the day, stayed between the middle and top until market close. Something very important to remember when trading the VWAP, along with any other trading strategy, is to wait for a confirmation. This is to avoid getting caught by a false breakout. A false breakout is when a price temporarily moves above or below a key support or resistance level, but then later retreats back to the same side as it started. In this example, if you were to go long right as that first candle crossed above the VWAP, you would have been a bit disappointed when the price moved right back below the VWAP and continued to downtrend all day. So there's the basics of the volume weighted average price, or the VWAP. Let me know in the comments what other topics you'd like to see covered in future videos, and feel free to subscribe and follow Gray Matter Trading on social media. Thanks for watching.